China's economy grew strongly in the first quarter, surpassing expectations. The surprisingly robust growth in the world's second largest economy was driven by factors such as external demand and export volume. Meanwhile, Germany is aiming to boost its trade ties with Beijing, despite complaints of unfair competition and geopolitical tensions. Now, China's economy expanded by 5.3% in the first quarter compared to the same period last year. This growth outpaced economists' forecasts of a 4.6% expansion. China has been Germany's largest trading partner for the past 8 years, with more than 5,000 German companies operating within its borders. Trade volume between the two economies reached $270 billion in 2023, but it's declined almost 9% over the past year. China's semiconductor output surged by 40% to 98 billion units in the first quarter, driven by increased demand from sectors like new energy vehicles and smartphones. Despite US export controls, which limit access to advanced chip-making equipment, China's IC production continues to grow rapidly, with national output reaching an all-time high of 36.2 billion units in March alone. Well, let's get more on this now with Fa Kim Beng in Kuala Lumpur. He's the founder and CEO of the Strategic Pan-Indo-Pacific Arena. Really good to have you back with us, Fa. Now, the latest growth figures coming out of China really did surprise many economists around the world. We know the Chinese economy has been struggling of late. Were you surprised by how strong the latest figures were?
Honestly, I'm not surprised at all, because China has this ability to prove the world wrong in many senses of the word. For instance, a rebound from the pandemic is actually a very difficult, it's a very difficult endeavor, let's put it that way. But somehow or rather, China has been able to rebound from a very strict movement of control in every sense of the word.
Yes, and we know that China's property sector really has been struggling over the past few years, but it seems to be making up for it in other sectors, such as chip-making technology, and that's despite the United States and other countries really trying to limit China's access to world-leading chip-making technology. Do you think China is able to shift its focus from the once booming property sector to things like artificial intelligence and computer chips?
There is a large probability that China will be able to make it in all the advanced sectors of the new economy that consists of artificial intelligence, automation, analysis of big data, so on and so forth. The reason being, China is actually very willing to spend a lot of money. For instance, the United States has set aside $80 billion to strengthen its chip-making industry. That's only a drop in the bucket of China, because China is more than willing to spend tens of billions of dollars a day just to be ahead of the technology curve. So in that sense, I feel that China is actually embracing all the challenges head on, and given the determination to do that, there is every possibility that China will do well in all these critical sectors. And this, besides, China is not completely obsessed with sectors that verge from 1 nanometer to 5 nanometer, which is the most critical one that the United States is trying to ban China from having access to ASML, so on and so forth. Because 98% of China's semiconductor exports to the rest of the world is concentrated from 7 to the 20 nanometers semiconductors. So there is a lot of room for China to grow.
Okay, certainly it's one to watch for China, isn't it? Fa Kim Beng, we'll leave it there for now. Thanks as always for joining us on Money Talks.